Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Wednesday, March 21st, 2018. I'm Frank Ochoa, aka Pivot Boss. Here's a look at the daily time frame of the ES. Number one, today is FOMC statement day, and the Fed interest rate decision will be released. That'll be at 1 p.m. Central Time, 2 p.m. Eastern. That's going to give us another data point that we can use. For example, the last one we have here is the January 31st FOMC key level, and that gave us 28.29 quarter prices sold off away from that level and have yet to be returned back to that level. The one before that is December 13th. We had November 1st over here as well. Those are the last several key levels. We're going to get another one here. So usually you'll see the market compress heading into that event. Once you see the news come out, then you'll see some sort of primary wave, perhaps a return back to that level. So there's going to be a lot of different opportunities that arise from that level. But first things first, we're still sitting here around the midpoint of the key range, and that's important again because that midpoint continues to be very sticky for the ES. We don't get too far away from it before we snap back. We go over here, snap back, up here, snap back, down and back. So it just continues to hold around that price. And again, it's the edges where everything is really in play. So right now, if price were to push up here and challenge this edge, that could provide another opportunity back to 2703. Likewise, if price breaks down and tests this recent pivot low, that could provide an opportunity to bounce it back up to 2703. So that's one thing that we'll be watching for when that 1 o'clock pivot comes on with the FOMC statement and Fed interest rate decision. We'll get that pivot. From there, the first move could be pretty solid until you see rejection, and then come back to the pivot. Could be a high probability opportunity on both legs. So we'll be watching for that. Until then, again, we could be stuck in this range for many, many months until we see resolution and expansion. And until then, we got to continue to look to fade the edges. All right, let's take a look here at the NQ. The NQ here, key level up here, gave out at 7K and dropped, is now forming a narrow range just above the previous month's close price. Again, this one is also compressing ahead of the FOMC statement. Later on, we have the potential to see a continuation back towards 66.53. That's what I mentioned last Friday. On this day right there, I mentioned that we're sitting just above the key range high, and if price can't hold the top of that range, we would likely see a move back towards 66.53. So the fact that we are now well below it suggests that any bounce towards 7K and as high as 70.50 could still be a selling opportunity for a move to 66.50. So again, even if we do push higher here, it could be a sell the rip type of opportunity for a move downward, at least on a short-term basis. Overall, we continue to flow higher, but we have better levels down here for bulls to defend than the current levels where we're currently at, especially if price gets heavy in this zone and can't reestablish back above 7K. If we take a look here at crude oil, this one has had a nice continuation. This was a day where we knew that we may be seeing the beginning of an upside break. The idea the next day was to defend the first pullback here for a shot at slingshotting higher into 63.75 and 64.24. And so we're basically right into that zone. We hit both targets, one yesterday, one today. We're now into this high, and this is the pivot point right here on that high where we're actually going to see if are we going to reject and pull back, very similar to what we just saw with the ES, or are we going to see an extension and continuation? Because on a longer term basis, there is the potential, especially if you're looking at this thing on, like, for example, a weekly chart standpoint, there's the potential to see this thing really start to break and see expansion from this key range. If we've seen enough compression and we start to see expansion, this thing could be headed as high as 74s over the next several weeks. So this is something where if the energy is ready to be released, we could be looking at significant expansion ahead. So right now, we'll see how does price respond to the 64.24. If there's rejection, perhaps we're coming back towards 62.18. But if the expansion is going to be new, any pullback could be defended for a continuation toward at least the edge of the range, which would be 66.29. So a couple of things to watch for here in crude oil. Alright, now taking a look at the moment right here, what we're seeing in the gold chart is a little bit of a pullback from yesterday's lows. But what we're also seeing is the continued development of that rounded top. That's very important, that rounded top that we were looking at right here. Very important again because it shows that the market has been compressing for a long period of time. After that compression, you usually see significant expansion. Additionally, right here where this edge is that's being supported by bulls, these bulls are getting paid less and less and less on every rotation. At some point, should the stops come out, it's going to trigger a big time momentum move downward. That can easily lead to a push to the previous pivot low in this case, but because this is so much compression over a 3-month period, reaching that low might be very shallow. If it were to go, we could even see more movement, perhaps down to 1200. So this could release a ton of energy. That's the idea. And if price can't hold this zone very long, we could be looking at expansion pretty soon. It may come after the FOMC statement comes out. Right now, 1, 2, 3, 4 days, very, very tightly coiled on a 4-day basis. We could be looking at expansion pretty soon. So again, I think we're on the tail end of this pattern's development, and we could be looking at expansion from the gold market very, very soon. If we take a look at Bitcoin, here's a look at Bitcoin. This one also had compression on a 3-day range basis, and if you look at it here, that's what we were talking about here, that very tightly coiled price action. I mentioned that if this starts to get back above 9K, that could release some energy back up here toward 11.3, perhaps as high as 11.5 to 11.7, these recent highs. And so right now we're starting to see, after yesterday's move, we got a nice little break to the upside. Today, a little pullback. So as long as price remains above yesterday's midpoint, the midpoint there of 86.80, more upside should be seen ahead. So again, right here, that's the midpoint where we had the upside break. Price can come as low as that point and still be a short-term buy. So right now, prices are above 9K. That's a good level right there for bulls to want to reclaim. And if prices can stay above 9K, you perhaps get a move all the way across this distribution. So it could be rather good. Now again, this market has been rather heavy, but every time it gets below 8K in that zone, that's where bulls have come in to defend. And so we're seeing that recent move yet again. We'll see if prices can continue to hold above that 86.60 zone for a continuation, perhaps to 99.20. And just like some of the rest, we're going to get another FOMC key level on Bitcoin as well to watch for the day ahead. Now, one quick thing I wanted to talk about Facebook here. This is one to keep an eye on. Obviously, this one's been in the news. Big time drop we've had over the last couple of days. By all measures, this one is undervalued significantly according to its recent behavior over the last, say, 6 months. Additionally, it is below or got below the key range low here, a significant rejection tail. All of this suggests that we could be looking at a bounce back toward 181.25. Now again, that's if this rejection day yesterday remains intact and 160 remains intact. So the midpoint on a day like that, 166.08, is going to be very, very important. If price were to open below that level, there may need to be more development, but opening above that level and continuing to close above that level over the next several days would go a long way toward perhaps filling this gap and maybe getting back to the midpoint of that range. So that's going to be one to watch ahead. Again, 160 is the main level that needs to be held overall. If there's a failure to hold 160, structurally this thing breaks down significantly. So that's a major, major pivot, and yesterday's price action provides a strong low that could lead to a bounce back toward 180. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you soon.